Good afternoon, everyone, and thank you for taking the time out to join us for the launch of our fourth import duty investigations report. We started this 2 years ago because we were struggling to understand why it was taking longer and longer for import duty investigations to be completed. We wanted to understand what the implications were of these delays, and a good way to do that appeared to be to put a report together. And so this is our fourth edition. For those of you who don't understand how all of this works, let me perhaps quickly walk you through how this process works. A company would approach the International Trade Administration Commission. They would say, we would like to get the duties increased or reduced on a given imported product. ITAC would go through a process and eventually, assuming they thought there was merit, the case would initiate. And at that point, we've got 4 to 6 weeks, depending if people request an extension, for interested parties to file their responses. That goes from there to the commission at ITAC, who then make a recommendation to the Minister of Trade, Industry and Competition. He ponders this recommendation. He sends his recommendation through to the Minister of Finance, and eventually the decision is implemented, either to increase or reduce the duties or possibly to reject the application. Now, that process is meant to take 6 months, and in exceptional circumstances with industries in distress, it should take 4 months. The reality is this is now on average taking 28 months. When we released our previous report, that was at 25 months. So definitely moving in the wrong direction. ITAC have been aware, not just ITAC, of course, government has been aware that the amount of time it takes on these cases is important. And we see this from ITAC's own annual report, where it says ITAC revised its timeframes for investigations from 12 to 6 months for normal tariff investigations and to 4 months in the case of tariff investigations for vulnerable sectors. And like I said, we are now sitting at 28 months. To break this down, we've taken the data from the last 20 years. So last time around, we looked at the last decade. And this time around, a very big thank you to Annika, the analyst who did really all of the work behind this, for putting the analysis together. So here we have a 20-year view, which is since ITAC came into existence in 2003. Now, if you have a look, you will see those sky blue charts, the bar chart at the top. The blue bars on that chart represent, each of those bars is a 6-month period. And the number you are seeing inside the bar is at the end of the 6-month period. If you took all of the open tariff investigations in that period and you said, what is the average period these have been open for? You will see in the first period, it was open for an average of 6 months. And we come to the most recent one, and you can see it is now at 28 months. Now, the line chart on top of that is also very important. The line chart tells us whatever the oldest open investigation in that period was, how old was that at the end of that 6-month period. And we'll see that for the first period, it was 33 months old. And you'll see as of at the end of December last year, that was 57 months old. And in fact, that investigation in the course of March will turn 5 years old. So we've never had any tariff investigation which has been open for 5 years, but we're about to have our first in just a very short amount of time. Now, the dark gray bar below the blue bars represents the number of cases finalized in each 6-month period. And what we've then done is we've broken it up into quartiles, and each quartile represents a 5-year period. So you'll see there's a little vertical line, and it gives the number of cases finalized in each 5-year period. So when you look at these together, what you very quickly realize is that the number of cases being finalized at the beginning were happening far quicker, at the same time, cases were being completed faster and more cases were being wrapped up. So we've gone from 136 cases in quartile 1, which is the 2004 period, 3-4 period onwards, to where we are now, where we've only finalized 42 cases in the last 5 years. So we're less than a third of where we were 20 years ago. So that's quite a significant drop in performance over that period. The implications of this are extremely serious, and that is what you can see on this particular graph over here. So let me explain this to you. The bars again represent a 6-month period. The numbers in those bars represent the absolute number of tariff applications that were received in a 6-month period. If it's in green, it is brought by the private sector. And if it is in the blue color, it is applications brought by the public sector. And that horizontal line you were seeing is the level that we are currently at. In other words, in the last 6 months, we have had 2 private sector applications. That is the lowest level we have been at in 20 years. When we released our last report, we were at the lowest level we'd been in that period at 3. If we go back a little bit further, we get to 4, and that was the lowest period, the lowest number we'd been at well, we've had a couple of 4-month periods, but 4 applications in a 6-month period beforehand. But we're in a very bad state here. What appears to be happening is we have private sector disengagement from the use of these instruments. Now, what we would typically find in periods of economic distress, such as we're in at the moment, we should be seeing the number of applications rise. If you look at the COVID period, for example, you could see it jumps up from 3 in a 6-month period to 10 in a 6-month period. So the trend should be upwards, not downwards. And yet we have the very opposite occurring here. So this disengagement means that functionally we are busy losing the use of this tariff instrument. And that has potentially quite far-reaching implications on the economy, because companies which are distressed are choosing to not use this instrument. It also means that companies who could be more efficient because they could lower their cost of their raw materials, for example, are also not using this instrument. We now have 50% more tariff investigations open than we did 20 years ago. So even though the number of applications has been steadily dropping, because they're not being finalized, we're just ending up with a larger and larger pile of investigations that are not being completed. We then also try to understand, where is the delay occurring? And so again, if we look at the top chart, the amount of time, the average number of months that investigations are spending at ITAC, or the green bar at the bottom. And again, if we go to the sky blue bar at the top, we have the average months with the ministers. So we can't separate out the Minister of Trade from the Minister of Finance. We have to view them together, because we don't get told when a decision leaves the Minister of Trade's desk and goes to the Minister of Finance. So that might be a little bit unfair to one of those ministers, but nevertheless, this is what is occurring. And so you'll see the blue bit of the bar is getting longer and longer over time. And that's unusual, because the bulk of the work that has to be done is done by ITAC, not by the ministers. And what has happened is there is some duplication that has started occurring. So we have a secondary level of investigation that has started happening inside of the DTIC. It's not entirely clear why that happens, but it does appear, and that might be part of the reason why these delays are getting longer. But again, you can see the same bar again at the bottom. The number of cases being finalized are going down. So the cases we have are taking longer and longer, and we're getting less and less of them out of the pipeline, which is, of course, not too good. Another important finding, particularly in this report, is that the import duties are simply too sticky. So what I mean by this is that when an import duty is imposed, it shouldn't be there in perpetuity. After all, there are many thousands of tariff codes. Nobody can keep track of whether all the duties remain applicable, companies go out of business, others pop up. And so the level of duty needs to be something that is reviewed regularly. And so what we did was we took the last 20 years and we broke it up into quintiles, each of them being 5 years long. So from quintile 2 to 5, these periods are each a 5-year period. So 4 5-year periods. And then all of the tariff codes that had not been reviewed. In fact, let me just take a step back and explain something. So we broke it up into those four, the quintile 2 to 5 being a 5-year period, quintile 1 being the whole period before 2003. What we then did was we took all of the tariff codes that attracted a duty of more than 0, and we said which of those tariff codes had imports coming through them in 2023. And we then said for all of those that have an import duty coming through them, when last were they reviewed? In other words, when last did someone look at them to say these duties should go up or down or remain the same? And what we found, which, if to be honest with you, was quite startling to us, is that 93% of all of the tariff codes that currently attract a duty have not been reviewed in the last 20 years. So in quintile 2, for example, 0.6% of the tariff codes that attracted a duty in 2023 last had their duties reviewed between 2004 and 2008 and so on. And then what we did was we did a duty calculation and we said how much duty was paid in 2023 on all of these codes, and we allocated that duty to each quintile. And you will see that approximately 83 billion rand was paid in duties in 2023 on products that have not had their duty levels reconsidered in over 20 years. And here's the distribution by industry. It's ultra summarized, but let me quickly walk you through what it is you are looking at. The top row is really automotive. It says vehicles, aircraft, vessels, but really 99.9% of that is automotive. And automotive is huge. It accounts for 56% of the import duties collected in South Africa. Clothing, textile, footwear is another 19%. And so you go down the list and you can see the distribution at this point by value of duty paid. Now, the automotive and the clothing sectors are politically quite sensitive, and perhaps we will not see these duties change in a hurry. But what we do find for things like chemicals, plastics, many of these are intermediate products. They're not finished goods. And with intermediate products, when you load up a duty onto an intermediate good, it means that the product you make out of that thing is going to become more expensive. And so in this process, if you don't review particularly intermediate products, you can start locking in a high cost into those supply chains. And again, you can see the distribution weighs very heavily towards quintile 1. Now, all of this would be fine if we could show that this was having necessarily a positive economic impact. We take the clothing sectors, we took clothing and footwear, which are the two biggest employers and should be the biggest employers in the clothing, textile, footwear sector. And the reality is the duties have not resulted in employment position improving. So in 2009, we employed 54,000 people in clothing manufacture. And as of last year, we employed about 26,000. So down 52%. If we look at footwear manufacturing, we used to employ 8,800 people. We now employ 5,600, down 36%. Now, I'm not suggesting that the only reason these have dropped is simply because the duties have been ineffective. And to a degree, especially on things like clothing, they have been a little ineffective because there's been an enforcement problem at SARS, and that is being addressed, but the reality is it is still a problem. So we have to be careful here that we're not loading up costs ineffectively. And the question has to be asked, how long is a reasonable period for duties to remain in place? And it turns out, looking at prior reports, the period most often identified before a review should take place is 3 years. That's a very reasonable period. So if you look through ITAC's investigation reports, they will typically say this duty is going to go up, but we need to look at it again after 3 years, sometimes after 5 years, sometimes after a shorter period. The problem is those reviews almost never happen. And we make available in our report a full list of what those reviews are and when they were due to be reviewed. And we'd like to strongly suggest that these reviews actually start to happen so that we can start to remove these additional costs in the supply chain. Another big development in this report has been we now have a new localization term that's been added to reciprocal agreements. So let me quickly explain what a reciprocal agreement is. When you apply for a duty increase or for duty relief, you are typically presented at the end of the process with a contract to sign. And that contract asks you to make commitments to increase employment. If you're asking for a duty increase, to not put your prices up beyond a certain level, to make a certain amount of investment, to invest a certain amount in training. And importantly, it's called an irrevocable undertaking. So the contract says that government can essentially hold you to the terms that you've agreed to. Well, a new term has now been added to these reciprocal agreements, and the new term is a localization requirement. And so if you require a duty reduction or duty relief, government will say to you, there may be, and in some cases there will be, a future manufacturer of this product. If you're going to receive the duty relief, we need you to make a hard commitment to procuring from this company when it comes online. This is a hugely problematic term because, firstly, the identity of the company that you're asked to commit to is completely unknown and it is not disclosed. The company there doesn't participate in the ITAC investigation. Remember, all of this is happening after the investigation has left ITAC. Now, the problem when this happens is that ITAC doesn't have sight of their arguments, but in fact, nor does anyone else who participated in the investigation. So what's happening here is you've got a separate process, and I think that undermines ITAC's role in these investigations. ITAC's role is to be independent. Their job is to adjudicate these decisions. And I think this whole process is worse off when they are bypassed. And effectively, it weakens their ability to fulfill their primary mandate. The other part of this is that unlike a normal investor who would, for example, set up their factory or intend setting up their factory, they would go and do a market assessment, they would go visit some potential clients, and they would say, look, this is what I intend doing. Would you give me a commitment? Here's perhaps a sample of what I can manufacture. This is very different. What we have here is the DTIC directly approaching the applicant. So the applicant is asking for duty relief or an increase, whatever it might be, and the commitment they need to make is not being made to the company. It's happening with government applying pressure. And this changes the role of government from being a regulator to an active competitor. And I'd in fact changed the wording here. I initially had down to a participant, but the fact of the matter is when government is doing the selling for a company, they're an active component of the market, and that is a problem. Now, there are also issues that then happen from a competition commission perspective. If you've got a thriving sector with many different companies that are potentially importing a material, and you compel all of them to go and purchase from a single domestic manufacturer, the effect of that is to massively concentrate the market. And ironically, if the same process was happening with a private sector company instead of government, they would be liable to some fairly serious fines under the Competition Act. But that doesn't seem to be a consideration here, where government is trying to concentrate the market themselves. And I think in there, we're certainly going to see problems over the next few years if this is aggressively implemented. I suspect the connection between the actions from a trade perspective and the actions from a competition perspective would have to be looked at a little more closely. Again, these localization initiatives, despite what their good intentions might be, have not put a dent into unemployment. When the first Industrial Policy Action Plan was issued, our unemployment rate was just over 20%. We're now sitting at 41%. So we certainly haven't seen a decline, and that's the primary objective of all of this, is to get to grips with South Africa's unemployment problem. So if we are going to intervene aggressively, I think it's important that the aggressive intervention results in a good economic outcome. And there's very little indication of that, which makes me quite nervous that these interventions might be causing more harm than good. The last report, we introduced the sugar duties. For those who don't know, the way the duties on sugar work is different to all other products. Sugar duties move up or down depending on the global sugar price. There is no investigation that needs to occur. When the global price of sugar drops below a certain reference price, the duties automatically need to move up, and vice versa if it gets too expensive. Now, the triggers keep getting missed, and we'll go through some of those numbers. There was a trigger hit in the middle of January, which should have seen the duties on sugar increase, in this case, to R1.34 per kilogram. Just to put some numbers to this, for every day that delay persists, there's R1 million in duties not being paid. To date, the delay in that implementation has so far cost the fiscus 16 million rand. So that is significant. And it's significant not so much because SARS wants to have more money. It is significant because the domestic sugar producers, who are already a distressed part of the economy, are now forced to compete toe-to-toe with much cheaper, and bear in mind, often subsidized sugar, making it very difficult for them. So the pressure I'm concerned about is that we are taking R1 million a day out of the sugar industry's pockets because they're unable to price properly. The flip side also happens, of course, when duties should move down, and at that point, the consumer pays a premium on that product while the delays occur. We know it should take 30 days for these investigations to wrap up, because this is what came up in the Grain SA court case in 2016, where it explains that for the most part, the duty changes took a month. This related to wheat, not to sugar, but the wheat triggers work in the absolutely identical way. And so it follows that we can apply the same logic. And the reality is we average out at the moment at about 78 days. Again, we've tried to understand where is the delay occurring. So when we talk about a delay here, we're only measuring when the trigger was hit and acted on. And you will see the green bar at the bottom is the amount of time spent with the ministers, and the blue bar at the top is the amount of time spent at ITAC. So you can see ITAC is doing their job pretty well over here. It's getting off their desk quickly. It's what happens to it after it leaves ITAC. This is particularly confusing, though, because there isn't an investigation required. You can also see the number of triggers being acted on have been dropping. So we've got everything taking longer, but less of it there to investigate, which is obviously not a good thing. We then looked at the period from 2014, which is really when this kind of structure of duty came in. And we've only got one incident where an investigation was actually wrapped up in 30 days on sugar. 12 of the triggers that were hit was simply missed or not implemented. So the problem is becoming particularly acute and needs to, I'd argue, be addressed. I'm struggling to understand why this is a problem. We talk about this in the report. I didn't put the quote in the slide deck, but a judge mentions in the SASA sugar case that ITAC, National Treasury, SARS, and DTIC need to get together to figure out how to get these processes moving quicker. That process has not happened, which is why we still sit here, and that's 6-7 years ago. But that becomes really important, that we listen to what the judge says and we address this. The implications of this not having happened is that since 2014, 709 million rand has been overpaid in duties, either because the triggers were just simply missed, or they happened, but they happened too late. Another 1.6 billion rand was underpaid for the same reasons, plus also because of an error in one of the calculations that resulted in the wrong duty being imposed. This is not a hard problem to solve, but it is an important problem to solve, especially because of the state that our sugar industry finds itself in. And so in keeping with how we approach all of these things, we've put out our import duty master plan. And let's just quickly get through what it is we are recommending be done here. We recommend completely getting rid of these reciprocal agreements. There's no evidence I have seen that they are delivering a net economic benefit. What they do appear to be doing is massively delaying the process. And we know absolutely that has a tremendous economic cost, most obviously manifesting through the loss of faith in these programs. We want to recommend, we've recommended this from our first report onwards, that the regulations need to be amended to put hard limits in place. Investigations should not be allowed to go on for more than 12 months. If it is an ITAC anti-dumping investigation, for example, it has a legislated hard cutoff at 18 months. And the reality is that those investigations do not run over 18 months very often at all. So having the deadline, I believe, would result in these cases being resolved quicker. I'm just going to touch on the more important ones here. If we can't get rid of the reciprocal agreements, then I would say we need to at the very least know when they were signed. And in a perfect world, I'd even say they should be published. I'd like to give this a little bit more thought, but if we're going to have government as an active competitor in the market, it strikes me as being extremely important to know what they extracted as concessions from companies. So the minute this changes into government kind of becoming the sales force of a private sector competitor, I think the secrecy around these agreements is then problematic. I'd like to also suggest that we have a list of all private settlements published. And what I mean by this is there are times when someone goes to ITAC and says, look, I'd like to get the duties increased on this product. And maybe they change their mind afterwards and they withdraw their application, or there's a private settlement, but that is never published. If you're on the other side of that, you're waiting for a decision. And the fact that you don't know that it's been settled means that you may not be making, for example, an investment decision that you would normally make. So the fact that they're not published It makes it difficult. This is not a hugely common problem, and I don't think this has been done with any malice in mind, but I think it's a good idea for there to be better disclosure around all of this. All of the duty increases that have been put through, I believe they need to be reviewed. I mean, we've put this all the way back to 20 years, and so absolutely anyone can go and have a look at it. Duty changes, when they are imposed, especially recently, ITAC absolutely publishes the period by which they should be reviewed. I'm inclined to think it should go a step further, and they should even mandate by when, and just give a date to say this is going to initiate on that date and follow through. There's confusion. There were court cases relating to the roles of the ministers of trade and the ministers of finance and who is responsible for what. The legislation needs to be updated to reflect the outcomes of the court case. At present, what's happening is we're not seeing the legislation reflect what the courts decided on. And I don't think it's fair for companies to be expected to be familiar with court cases in a space that they typically may never deal in. The proposed process by the judge, I'd argue that has to happen. We would like to see if there's a delay on sugar or wheat changes, that the party responsible for the delay needs to give their reasons. I put an LOL in brackets because we all know that's never going to happen. We will be requesting an opportunity to present the findings of this report to the Parliamentary Oversight Committee. I think an intervention needs to happen here before we utterly lose the use of these instruments with some very horrible consequences to the private sector at a time when they need the ability to access these instruments, I'd argue, more than ever. Final comment, again, please remember we have live tariff tracker dashboards. We've made some very exciting updates to it. You can access it at the website address at the bottom of my slides. It's free of charge. Just register, log in. You can have a look at whatever you want. You can download the full report from there. You can also have a look, for example, at the list of investigations which are due, what dates they were due at, etc. So use it, share it with all of your friends. We are trying to get the business sector more involved with this very important problem. There's no cost involved. All you do is register and you've got immediate access at any time. And I am absolutely done. Absolutely done. Do we have any questions? I'm gonna start to answer some of the ones that were typed, and then we'll take some verbal ones. Gustav, very important to note that the increasing time taken to complete investigations starts exactly when Patel was appointed as Minister of Trade. I'm sure that's nothing but a coincidence, Gustav. And unfortunately, we bungled something with the links. Some people were not getting their confirmation. So I've got lots of Nadia's here. But because of the way Nadia circulated the links to everyone. But let me quickly read what it says. Hi, Donald. Interesting to note that the public sector institutions also submitted tariff applications. Can you shed light on what those applications would entail? Is it for industrial policy purposes? So the answer is yes. Sometimes it is for industrial policy purposes. Sometimes they would initiate a review, which is one of those things we think are very good. So ITAC, for example, about a year ago, self-initiated a review on the duties on aluminium because they were not certain if the duties were appropriate. And so the applications that we see from the public sector are typically for industrial policy or just to get a sense of if the duty levels are correct. Tokozani, surprised by automotive, especially considering the APDP program. Are manufacturers not taking advantage of that particular rebate program? That's a very good question. So I'll tell you why this is very high. They absolutely are taking advantage, but bear in mind, the vast majority of cars sold in South Africa are not manufactured in South Africa. So what is happening is the automotive producers are generating production rebate credit certificates, which they can then use to offset against their own import duty liability. But there are far more cars imported than there are production rebate credit certificates. And so what we see as the duty paid are on all of the models of cars that are not made locally. So if you think companies like Hyundai, Kia, etc., have no production here, that is where most of those duties are coming from. It appears the DTIC does not trust the ITAC recommendation. Yes, that does appear to be the case. Have we weaponized trade protection measures in South Africa? Well, I don't think so. And in fact, I think a lot of this has been done. I don't think it's been done in bad faith, but I think the outcome of this is quite harmful. So what we instead find is there's a desire to produce more products locally. So within government, they want to see more localization. The way that those interventions occur is then by putting import duties in place. So it's one of the ways that occurs. The problem is the import duties are not resulting in the investment. So the duties are going in, but the investment is not following. And the investment is not resulting in employment. So all we're doing is we're just inflating the cost of products, but we're not getting the effect that we're looking for. And because there isn't a process of reviewing this, all that happens is the duties go in, and as you saw earlier, they just remain in place forever. Anonymous says, we have some of the best fiscal policy transparency characteristics in the world. This was again mentioned in the budget review last week, but it would appear that we have the opposite for trade and industrial policy. Yes, that's absolutely true. And I don't think that is an accident at all. Definitely more of a feature than a bug of the system. In part, this happens because government is attempting to extract jobs from companies one interaction at a time. So you're sitting with company A and you're saying, you're asking me for this. Whoever the person is that has the misfortune of being the person to make the application, government is attempting to extract what they can from them. Until we had published the report, all of those were being done in secret. That's obviously problematic. I wouldn't suggest that there's any corruption, but there's tremendous potential for corruption in a system like this. So yes, it is not only is it not in the public domain, it is becoming more secretive, not less, as time passes. And I don't think secret deals are never good. Mike, to your question, any news on SARS improving their compliance unit? I can't answer your question immediately, but we are having a meeting with SARS very soon on that discussion point. So we met them about a month ago to talk about it. We've got an update meeting after, probably happen in the course of March, and I'll have a better answer there. But my understanding is yes, that they are working hard on addressing that. Do we know if other emerging market countries are also experiencing the same lull in the utilization of trade protection instruments? The developed world is certainly not. Yes, that's absolutely correct. I don't have hard data on that. And the processes vary quite dramatically globally around how tariff reviews happen. So I don't have the benchmark data, but I absolutely agree with your comment that the developed world is certainly not. Is there a role to be played by local authorities, provinces, to support the submission to the parliamentary debate? Yes, I think there absolutely is. We are looking for as much support as possible. I am quite distressed at how little is being done to address this. So any support from local authorities and provinces, to get this discussion happening would be tremendously appreciated. What needs to happen for this to fall on receptive ears? All hands that can turn the ideas to action. What are the required action points, and what is the prospect of success? So, in fact, we're not. Thank you, Adrian. We're not entirely cutting our wrists at this point. A couple of things have happened. The deterioration for this period should have been considerably worse than it was. So we can tell, for example, as the periods start to run to closure, our 6-month periods, where we're putting our cutoff reporting periods are known, and we can see as the run-up gets close to that period, investigations start getting finalized. So that there does appear to be some action, but it has to be a lot more than that. We've had many meetings with ITAC, and right after this, we will request a meeting with the Commission to address them. We've attempted for 2 years now to have a constructive meeting with DTIC. That has not succeeded, unfortunately, but we will keep persevering, and we will again request the meeting with the Minister to discuss this. We have to get to a point where it is resolved. But I do think the publicity and putting the data into the public domain has made people more aware. We are talking to the bigger business organizations to get behind what we are trying to do before we completely lose these instruments. Please clarify on reciprocal agreements. Do you mean with other countries? My apologies there. No, that's not what I mean. What I'm saying is government is requiring a company. Let's say in my example, we have a producer who wants to get duty relief on a raw material. If ITAC approves their duty relief, government will say to them, I need you to sign an agreement with government that you will create a certain number of jobs, that you will invest a certain amount in your factory, etc. That commitment is made for a 3-year period. They also call it an irrevocable undertaking. It's just synonymous for the same agreement. And no, so it's not with another country. It is between government and the applicant. Now, you can quickly imagine the problems that arise if you happen to be the company that brought the application, but you have 5 competitors who benefit but didn't apply, and you're stuck making the commitment. So the problem here is it's getting more and more onerous, and I think that's just a net negative. Have you investigated the time ITAC takes to complete its investigation? Has it remained the same? Let me quickly go back. It most certainly has done anything but remain the same. My apologies, folks. Let me go back to that chart. So if you have a look at that chart, the chart on top, you can see on average it was taking 8 months for an investigation to be completed. 20 years ago, about 10 years ago, it was taking 5 months to be completed, and it's now taking 28 months. So absolutely not. The deterioration in performance has been astonishing. I'm very careful, though, to blame ITAC, because I don't think much of the problem sits with ITAC, and I think they're trying very hard to resolve this problem. But I do think the problem sits when everything leaves ITAC and heads to DTIC and Treasury, and that is where the problem, I think, this will be resolved. Regarding the sharing of my presentation, yes, we will. When this is all done, Nadia will circulate it to everybody that's here. You can also, of course, just go to the address at the bottom, tools.xagta.com, and you'll be able to download everything there. The recording of this will be up on our YouTube channel within a day. Is the SADC arrangement a loophole for duties in SA? Example, import via company in a MOS IDZ who in turn exports into SA at much lower duties. I mean, Mike, that would be tax evasion, so it's certainly not allowed to happen. If it does happen, I mean, that would be a problem. So the rules of origin says that The goods have to be manufactured in SADC. They can't simply be shipped through. But does it happen? Probably to some degree. But that's not a policy problem. That's an enforcement problem at SARS. Another anonymous question: whose responsibility is it to investigate the effectiveness of the duties? Well, there isn't a legal responsibility put onto anyone to do that, but ITAC typically take on that role. They've just appointed an economist recently, so that's very exciting, and I'm sure that will begin to make a big difference. But the important bit of this is it has to be reviewed. There isn't anyone right now who has the responsibility, but I believe ITAC would best be placed. I would also think there's probably scope to look at an independent body doing a much bigger review. So in other words, not looking at it from inside. My concerns at the moment is we end up with a situation where, for example, the effectiveness of the duty is measured by saying, look, we gave these guys duty relief and they committed to employ 5 people, or we increased the duty and they benefited and they employed 5 people. So that's a good thing. But that is a very simplistic way of looking at the problem. So there are all kinds of consequences to increasing duties, for example, depending where you are in the value chain, how elastic the demand for the product is, how long it remains in place for, the welfare of the consumer, etc. And I think there's probably a good opportunity for an independent firm to take a look at such a review to say, on balance, are our duties generating a good or bad outcome? And if anyone wishes to do that, we have the data to support it. But secrecy around reciprocal agreements smacks of good corporate governance as espoused in King. It means not addressing all stakeholders in the process. I think you mean not good corporate governance, but yes, I completely agree. On the comparison to other jurisdictions, sadly, I don't at present have. It's data that would be very hard to get. I mean, it took literally years for Anneke to put together what you guys have seen very quickly here. So the ability to get that kind of information, I think, would be very, very difficult. But noted, if it's available, we will try. ITAC is not the problem. It is DTIC. Reciprocal agreements are nothing else but economic growth by decree. It does not work. SA metrics equals evidence. Mike, DTIC have appointed Genesis to review the effectiveness of trade policy. Have you participated in this review? It seems good news that they are reviewing this. Your thoughts? I was not aware that Genesis are reviewing trade policy, and I have not been contacted, but I do think it's a good thing that it is being reviewed. By the way, we don't mention this here, but South Africa's kind of updated trade policy was recently published. There's another updated policy on localization, which has come out. Again, we're less concerned here with whether localization or protectionist stances are good or bad. We're saying, even if you love localization, in our last report, I said more than you love ice cream, you still have a problem here in that you're not achieving localization if it takes you 5 years to make a decision. No company is going to sit on an investment decision for 5 years. Anonymous, wondering if you could speak to how protection measures for steel factor into broader negotiations between DTIC and AMSA to sustain domestic steel production. Yeah, I guess this has become particularly pertinent with the potential closure of Newcastle, which I really hope doesn't happen. The steel sector is unbelievably complicated because government has intervened all over the place. And I think the sustainability of domestic steel is not just a question of how well ArcelorMittal, for example, can manufacture hot rolled coil. We've had other interventions in the scrap metal sector, which, for example, has dramatically lowered the price of scrap metal, which means all of the mini mills that are where ArcelorMittal competes in an overlapping space with a mini mill, they're unable to compete because the subsidies going to the mini mills distort the price so much that ArcelorMittal can't manufacture at those prices. Those distortions are huge and they continuously get bigger. So the sustainability would also require some policy position changes. And I think the very aggressive and very complicated interventions in that steel value chain have placed the whole of the steel sector at risk. So I would argue less regulation around steel would probably result in a more successful steel sector. Mike, I mean, I'm seeing you here. Do you want to take a swing at that, being the CEO of Max Steel? Mike? No? Or Mike is muted. I had put you on the spot. My apologies, Mike. Does anyone else want to perhaps pose a question? Put your hand up and we can answer as best as possible. No? All right, excellent, everybody. Please, I'd encourage you to please go and visit tools.xagta.com. You can register, view everything. It'll be kept up to date, which means if you go into the site, you can at any given time see what the status is. If you're exposed and one of the cases we're talking about. Oh, sorry, can someone unmute Mike? I'll get to the question in a second, Mike. My apologies about that. Oh, yes, if you go to the website, you will be able to view all of the open investigations. You can see how long they've been outstanding for, what the implications are per case. As cases get resolved, the site will update. So we're trying to give everybody the best and most accurate version of the truth at any given time. Mike, I'll just come back and repeat my question again. The anonymous question was wondering if you could speak to how protection measures for steel factor into broader negotiations between DTIC and AMSA to sustain domestic steel production. Mike, CEO of Max Steel, you have the floor if you're unmuted.
Yeah, a little bit, you know, obviously, can you hear me, Donald?
Yes, clearly.
Okay.
Thank you.
Hi. You know, there are clearly negotiations between AMSA and government around trying to ensure that Newcastle remains sustainable. They've deferred the decision for further 6 months, pending agreements, and that's public knowledge. That's not news. So we wait to see what those subsidies are going to be and what the impact of that will be. Typically, it revolves around Transnet logistics. I think the scrap duties have been essentially lifted by virtue of the export of scrap having ceased. It's just come to an end. There's still the PPS system, which is the preferential procurement system, is in place in scrap. So there is an element of that still in place where local scrap users can buy scrap at a discount relative to an export price. So there's a lot on the go. I think we're all very concerned about the sustainability of the steel sector, as you put it earlier. Those negotiations and outcomes will see the light of day in the next few weeks, months, I suppose. It's hot topics. Whether that will create sustainability for the steel sector in the face of excess supply over demand is questionable. I think fundamentally the country has to take another step in terms of creating positive sentiment, building infrastructure, and boosting demand. I think trade protection around finished goods is key. We need to boost manufacturing in this country. And that's where trade policy should be directed. Fundamentally, the steel sector is suffering from a lack of demand, plus the overcapacity brought about by trade policy. So very complicated, as you quite rightly said, Donald, and we wait and see.
Yeah, so maybe add a comment which I think is important. So you can't protect yourself to growth. You have to get the growth first, and then the protection becomes less important. So I mean, a big part of the challenge, not just with this sector, but because there's no growth in South Africa, everybody is fighting over a shrinking pie. And because we've had just a almost complete failure of our infrastructure, for example, we then have the additional problem that South African manufacturers are becoming less competitive simply by being here. If you did everything as you did 10 years ago, you would be far less competitive now, because you have to contend with Eskom and broken ports and, insert whatever other woe you wish. And so by doing that, you can't remedy that problem by just saying, let's just keep giving more duty protection. And I think that's roughly the position we're in, where because government is not taking the hard decisions that would allow the economy to grow, we're instead faced with an alternative, which is, well, we won't let it grow, but what we'll do is we'll direct the small bit of business in South Africa to a small number of companies. Yeah, I would think, Mike, that the best thing that could happen to the steel sector would be government to actually do the investment in infrastructure that they keep threatening to do. If demand went up, I would think there would be far less complaining about competition from imports.
Absolutely, and consistency and in policy is key. Creating the right environment where we can take risk, where there's certainty of what life will look like in 5 years' time when these projects come through, and they start producing money, is key. I think the private sector is keen to invest. We're all wanting to reinvent ourselves in one way or another and grow, but we can't do that with the current backdrop of uncertainty around shareholding, around rand dollar, port congestion. We all want to export in a weak currency environment, and we just can't get our goods out. You hear multiple stories of congestion at the ports impacting our customers, for instance. Our customers, we all need stock to trade and sell, and if it's all stuck in the port, we're never going to have turnover. Without any turnover, there's no margin, no profit, and no salaries. And quite frankly, we need to start jacking ourselves up and making sure and look, ultimately, government needs to get out of the economy and just become the regulator. Can't be owning the means of production or the key components of what makes this country work. Get out of ports, get out of logistics, get out of power. That's just my political soapbox coming to the fore. But that's where it needs to be. Nothing new, nothing fancy. Let's get back to basics.
Yeah. So in fact, Mike, we see the very opposite happen. So the degree of intervention is getting bigger, not smaller. And as evidenced by this new reciprocal agreement. And I think we're heading for a position where companies have a real risk of being turned into kind of state-managed enterprises. You're having government on your board of directors who are deciding who you should buy your product from, and that doesn't feel like it has a good ending at all. So while you were saying government needs to regulate and not participate, the opposite is happening. Far greater participation. If you have a look at the amendments made to the Competition Act. And these market inquiries occur, and then companies are being instructed that they have to dispose of parts of their business simply because they've gotten too big. So you've been penalized for success. This is not necessarily connected to an abuse of that dominance, but just the fact of the dominance is creating a problem. And so with this in mind, it appears that we're seeing more, not less, intervention. Another comment, customs duty should only be a temporary protection measure for industries to become competitive. I absolutely agree. But this too is not the case, as we've demonstrated. To just very quickly bring this up again. 93% of all tariff codes which attracted a duty and duties were paid on last year, last had their level of duty considered more than 20 years ago. These absolutely need to be looked at. The big and obvious ones like automotive, maybe the argument would be, well, government will never budge on that. But if you consider all of the others on that list, and I mean, there are thousands of tariff codes that we're talking about. So we're not saying there's not 50 or 100 codes. Thousands of tariff codes are sitting in that big quintile 1 bubble.
May I come here and give the exact number?
Please. Yes. Go ahead.
So overall, in 2023, 3,400, I think, tariff codes were imported that had a duty on. That first bubble is around 3,170 tariff codes.
So it's enormous. It is absolutely enormous. And that 83 billion rand, I mean, whatever percentage of it, let's say it's 10% of that shouldn't be paid because there's no domestic producer anymore. That's 8.3 billion rands worth of cost we're adding to the economy, with there being absolutely no economic benefit. And so adding this additional cost to say the right answer would be to remove the duty, but to do the right thing, I'm now going to require you to give me all of these other conditions, is a terrible idea. We're penalizing people to do the right thing. And it's extortive. Yeah, at some point, you've got to say, what is the objective here? Is the objective to create a competitive economy, or is the objective to micromanage every business that ever interacts with government? I completely disagree. Nowhere has the private sector been able to grow a developmental state. That makes no sense, because large businesses, by its very nature, tends to marginalize small enterprise. And if government steps out of the equation, small business will be limited to spaza shops. Let me challenge that. Thank you very much. I would say we're doing the very opposite of what you're talking about. So if you create a market that is very concentrated, if you endlessly protect only the biggest companies in South Africa, then where on earth do you leave space for small businesses to thrive? If you have a look at the duty protection, we didn't put it in here, but perhaps in the next version, we will put it in. The duty protection we have in South Africa almost all goes to monopolies. So let me give you some numbers to that. If you take anti-dumping instruments and you look over the last 20 years, and we say, who were the biggest applicants? Which companies made the most use of the anti-dumping instrument? You will find that about a third of all anti-dumping actions brought in South Africa were brought by 5 companies, or 5 sectors, the industries, my apologies. 4 of those 5 sectors are monopolies. Of those, and the 4 monopolies we have, all 4 of them are more than 100 years old. So again, I'm saying case by case, obviously you have to look at things, but we are not, there is no participation of small businesses in these instruments. These instruments lock in a very rigid, large set of companies in perpetuity. To the question of the developmental state, I would argue we have a tremendous amount of government intervention, and I'm struggling to see where the benefit has been. Our per capita GDP continues to fall. People are getting poorer. So if this is how a developmental state looks, I'm struggling to see how this benefits the average person. And again, I'm not someone who says there should be no government in the market, but if you can point to even one, master plan which has generated a net positive benefit, then you'll have my apology. But I have yet to see any data supporting the fact that the interventions in the market have yielded a benefit. And to your other point on large business, I absolutely agree with you. But we protect large business. Our economy doesn't look any different to how it did under the apartheid state. You still have a small number of very big companies that dominate. That's a low employment environment. It's a low innovation environment. And the bulk of our protection goes to protecting the biggest businesses. But thank you. That's a very good point. Thank you very much. That was based on the previous man's comment. It seems that the monopolies want to continue monopolizing. I agree with you on this very issue. Okay. All right. Excellent. I would just want to see, does anyone else want to either type or put their hand up and ask a question? Otherwise, we will close off. All right, everyone. Thank you so much for taking time out of your busy days to give me an hour to listen to me drone on. A very big thank you again to Annika, who did all of the hard work behind this. And please visit the website, tools.xagta.com, download the report, have a look at the dashboards. If any of you were struggling, just let us know. And of course, all of you that attended, you will also be emailed a copy of the report. It's not confidential. Share as widely as you wish. Quote from it. Oh my goodness. We've got two more. Are the interventions not limited by the vantage point of business? Should business begin to participate hand in hand with government? In that way, we should attempt not to see them as the enemy, but rather how do we form partnerships with them that lead to a growth environment? Absolutely. And I'm not for a moment, if I've come across as government as the enemy, then, certainly I've made a mistake. That's not what I'm trying to say. But their attempts at this, the current term being used is social compacting. The reality is that much of that happens in a way that reduces levels of participation. So, for example, if you look at these master plan committees, there are whole sectors and whole companies that cannot get onto those committees. There's a lot of secret discussions that happen there. There's an imbalance created in the market. And so what we're doing is we're creating a tremendous amount of economic value if you can figure out how to get into the room. And there's a huge penalty to be paid by everyone who can't get into the room. So I would argue that yes, but the interventions and interactions with government have to be meaningful. We've made recommendations, for example, that with technology as it is, much of these forums can now be opened up to people. There's been very little appetite to do anything with it. But I don't think the current way we work, which is not business and government, but typically one or two businesses and government working hand in hand, I think the net effect of that is almost always very, very negative. Ishmael, interesting question. Can tariffs be reduced to defeat monopolies? In fact, it's a very interesting point. ArcelorMittal had a 5% duty on steel. No, let me rephrase that because I'm picking on ArcelorMittal here. There was a 5% duty on steel, and then around 2004, government actually removed the duties on steel because they wanted to bring more competition into the market. And that's a normal way things work. Again, I'm not taking the extreme stance, which says there should be no duties. But I think when duties are evergreen, there's very little benefit that accrues to the country because of that. We are competing with the rest of the world, not as South Africans. And that seems to be where the issue with our inability to speak and listen to government and business. South Africans are their worst enemies when we go out into the global environment. Yes, I can't argue with you about that. Guys, I'm gonna have to wrap up at this point. Thank you so much. The recording will be on YouTube and you'll be notified when it is up. Have an absolutely wonderful day. Thank you.